Neither populist nor prudent, but surely a bit of both. The BJP has called it clever bazigiri, as the finance minister has indeed walked the tightrope. Chidambaram kept the tax structure largely unchanged, only announcing a tax credit of 2,000 rupees for every person who has an annual income of up to 5 lakh rupees. But the finance minister also announced a 10% surcharge on persons with taxable income of over 1 crore rupees. Here are the highlights of the pre-election budget.
Walking a tightrope in a pre-election year, the finance minister choosing not to tamper with the tax slabs.
The rates of personal income tax, 10, 20 and 30, have survived 4 finance ministers and 4 governments. The current slabs were introduced only last year. Hence, I'm afraid there is no case to revise either the slabs or the rates.
While the tax slabs remain unchanged, those in the lowest bracket, that's about 1.8 crore taxpayers, getting some minor sops.
I'm inclined to give some relief to the taxpayers in the first bracket of rupees 2 lakhs to rupees 5 lakh. Assuming an inflation rate of 10% and a notional rise in the threshold exemption from rupees 2 lakhs to rupees 2 lakh 20,000, I propose to provide a tax credit of rupees 2,000 to every person who has a total income of up to rupees 5 lakh.
But those who fall in the category of the super rich, or about 42,800 people, will have to bear an additional surcharge.
I propose to impose a surcharge of 10% on persons whose taxable income exceeds rupees 1 crore per year. This will apply to individuals, HUFs, firms and entities with similar tax status.
The finance minister adding the rider that this additional burden was only a short-term measure.
But, Madam, I may add, the additional surcharges will be in force for only 1 year, that is financial year 2013.
While the 3% education cess will continue, first home buyers have been offered a new cushion.
In Part A of my speech, I had referred to the tax benefit to the first home buyer who takes a loan for an amount not exceeding rupees 25 lakhs. I propose to allow such home buyers an additional deduction of interest of rupees 1 lakh to be claimed in assessment year 2014-15. If the limit is not exhausted, the balance may be claimed in assessment year 2015-16. This deduction will be over and above the deduction of rupees 1,50,000 allowed for self-occupied properties under Section 24 of the Income Tax Act.
In a move to tap more revenue, Chidambaram has imposed an inheritance tax of 1% on transfer of immovable property of over rupees 50 lakh. But this would exclude agricultural land. Bureau Report, Times Now.